The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days, and at noon we usually go to Larry Pesavento. I will not be able to do Larry's show this afternoon, 1 o'clock. I'll be back tomorrow to do 2 hours. But in the meantime, back at the ranch, this is really interesting. One of the reasons why my bias has still been to be to look for higher highs, other than the fact that the New York Stock Exchange made an all-time high, is because I see enough internal strength. There are three things that you need to be constantly aware of when looking at the larger trend. Number one, without bad news, markets tend to rise. Unless you're in a bear market and the bear market will be enveloped with bad news, most of the time, markets will tend to rise unless there is just a real zonk, and it's not a one-time thing. You need to have perpetual. Now, in my mind's eye, I have this just clear picture of trends. And normally and this goes back to when I was just a little child. And what would happen is I would notice something, but I'd only notice it after a couple of times. I mean, I'm not sure it would be the very first time there was a change of anything that I'd noticed, but I'd notice repetitive patterns. And then I would take that repetitive pattern and I'd store it in my mind and I'd forget about it. I have a terrible memory, a short-term memory. A terrible short-term memory for certain things. But chart patterns just have always stuck in my mind, chart patterns and repetitive things. And over the many, many decades that I've been involved in the market, it appears to me that you can take it as a really good sign of something that's happening if a particular trend shows up and then gets repeated. And that invariably implies to me that for a market to go down in a sell signal to a sell mode, that's very serious. You need to have, in the market's case, bad news, and that bad news needs to be repeated very often. It can't just be, oh, there's something happening in the Ukraine, and then 5 days later, nothing's happened. It's just got to be whatever it is. And if that doesn't happen, there will be like a cork in water. There'll be this bias towards floating towards the top. Okay, let's get that out of the way. That's number one. Number two is over the last couple of years at least, I've made a really big deal about the volatility index, the VIX index. You can find it on any software package. You get it either $VIX.X, that's how I get it, or there's a sign, a symbol, then you put VIX. Find out how to get it. It is really important as far as I'm concerned. It has been, I constantly remind myself about David, the viola player, who still freelances as a viola player. We played together back at the New Conservatory when we were getting our master's degrees. And he got a CPA at some point, and he started a company, or at least a service that essentially invests in socially acceptable funds. Let's make it as simple as possible. And I spoke to him about 4 years ago, I think it was, and he said, I don't know what to do. This market is just killing me. It was, maybe even more. He said, I don't know what to do. And I said to him, David, make it as simple as possible. If the volatility keeps going lower and gets into the 20s, that's really good. And if it ever gets into the teens, that's even better. So that's another really simple way of looking at this. And the other aspect is that with the technical framework that we use, I need to see Ds, at least Ds in weekly charts, before I can accept that there's going to be a more serious decline. Once the New York Stock Exchange went to its new high on Friday a week ago, I had to say to myself, at a new high, starting leg C in the weekly chart, at all-time highs, it is so rare for an index to make a C minus and fail without going to at least a D. Usually it's a D and an E, maybe even an F. 4 higher peaks, maybe 5 or 6. So that to me says that any decline in this particular time frame, now I'm going to add another contingent aspect, and that is if you've had a 47% decline in a stock like LinkedIn, the premier company going all the way up to the end of last year where it hit 257.56 social media, having made a round number 136 low this morning in a potential trough G, 47%, it is ready for a bounce. And in the rotational aspect of markets, if you can get your weakest sector, now I'm going to keep this up here. I want this ready. That's my little percentage change calculator because I want to look at others and we'll go straight to the market. In the aspect of failure patterns, I can't hang my hat on just one index, even though it's 1,850 or something like that, stocks, the New York Stock Exchange. When we are looking at a very broad index like the IWM 2000, the Russell 2000, having just slipped to a leg E to the downside in an arch formation, a bounce off the 108.43 level, having gone 23 cents lower than the previous April low of 108.66, says if there is a bounce from here, you could finally have a larger move to the upside on a percentage basis in some of these battered great winning stocks of 2013 into 2014 that have just been taken a huge hit. 47%. What is Amazon? AMZN trading right here at Amazon went to a lower low. It went to 228 on the 26th, I think it was. What was that date? On the 28th, it went to 228 round number. 288, is that? No, it must be 200. 228? No, 288. Big difference. That was a mistake. 288 round number, 288 round number. I know I should know that because we traded it for a very nice profit on the bounce. And this morning's low is 286.68. So in the Chapman wave methodology, this is a very important arch formation test. It's gone to a lower low, but my suspicion is that there's a chance, just a chance, and I would put that chance greater than 50%, that we're going to have another bounce. Oh, there you go, peak in the den. Athena's down now 50%. I mean, that was my favorite short that I never shorted. I can't believe it. I forgot about Whole Foods yesterday. I was doing so much work that I didn't look down at my notepad, which had a big red WF, Whole Foods, my WFM. And I forgot that the earnings were coming out. That was my perfect short. I was waiting. Well, we didn't short it. These are huge hits, and at about this level, that's when you can expect some kind of a bounce. And if there isn't a bounce, that's bad news. But there's the chance that there could be a bounce. So the IWM is ready for a bounce. The QQQ series, it hit the downtrend, what I call the Chapman wave inside wedge, dashed line. Usually it's pink. I'll make it pink here. Pinky pink. There you go. Support level, and it's trying to hold that. But otherwise, it'll test the low of 85 right there. 85 in the 120-minute chart. 180. Why am I just saying 185? 85.11. and this morning's low is 85.53. So there's your arch formation, and we'll see if it holds. The day is young. All I can say is Yellen didn't say anything that we didn't know. We're not getting bad news. I think we could drift. And I'm not, let me put it this way. I'm not a whopping bull, but I am more positive than negative. And I'm suggesting that we can, in this pattern that I'm showing right now, if you're looking at Tiger TV, this pattern, this is what I give my subscribers every day. I give them a detailed explanation and hear what's going on. Then I add to it another little paragraph underneath, a bigger update, let's say a more contemporary update, because it'll be in the morning, just about before 7 o'clock, when I usually send out the Dow chart for people to study, and then I'll show the overview chart, and that's very detailed with the parameters. And what it said is over 1410s. I actually said 1420 in the overview. You can expect some selling, and if it holds, then you'll see selling maintain. But in fact, what we've done is we've gone to 1449 in the VIX index, and we've pulled back to 1382. I mean, every time that VIX index rallies, it can't hold it. We'll see by the end of the day if something happens. But if it goes to a higher high, that's going to be bad news for this market. Meantime, that 200-period exponential moving average on the 120-minute chart of the Dow at 16,371 was just briefly breached. No, 16,357. Yes, was briefly breached. And now we're bouncing back. The Dow's up 34 at 16,435. The S&P is unched at 1867. You've got the composite index down 48 at 4,031. Let's see if these numbers can hold. That was a round number on LinkedIn. So we're going to see what happens here. As I say, this is the opportunity for them to at least have a decent bounce. Another decent bounce. And if that fails, then we've got to say, hey, you've not made a new high in the Dow. You've not gone above 16,631. You certainly haven't gone above 16,620. That was the high of the 2nd of May. But you have gone to a high-level consolidation. But there's a potential arch formation if you don't break out to the upside. The S&P, also, same thing, hasn't gone to a higher high than the 18, what was that? Well, why do I get that? 1891.33 high, also on the 2nd. So we're going to watch this real closely. Meantime, back at the ranch, you've got gold down 10 at 12.98. Let me show you something in the gold chart here. One of the reasons why I nibbled at a gold chart with my subscribers, 2 days ago, 2 days ago, and then we got taken out for a smallish loss, is I just didn't want to hang around. Gold is struggling. I'll be back. We'll talk a little more about it. Basil Chapman, Tiger Technicians Hour, Dow's up 28, S&P's down.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. And I've got a bunch of questions, a bunch of stuff going on. And I'm going to just deal with our caller online right now, John in Philly. Hi, John. How are you?
Hey, Basil. Thanks for taking the call, sir. I wanted to call in and ask you about the Chapman wave procedures, specifically as applied to the NASDAQ 100 futures, which is the NQM4 contract.
Okay.
Basil, I wanted to ask if you could pull up the 30-minute chart.
And hold on a sec. Let me just get it. 30 minute. It's right here. Now, I hope I haven't lost. I had this all notated, but I lost a bunch of charts because I had to go back to my database, which was a week old, so all the up there. Okay. Yes, your question.
And my question, sir, is this. The NASDAQ futures made a high over 3,600 on, let's see, it would be Tuesday morning early.
Yeah,
then this morning early, Wednesday morning, about 3 in the morning, there was a low made at 35.42. And I was doing my Chapman wave count as applied to this pattern, and that low this morning at 3 a.m.
You're talking about that? You're talking about the tiny little doji low at 3:30 this morning, and it had, if I can read this now, and now they've made it in red. That's 3541.25 was the low.
Exactly. Now I had done my labeling and seen that that trough turned into that leg down turned into trough G, your maximum count in the Chapman wave.
All the way down. Yep.
We had a nice bounce, into 8 a.m.
Right.
And then a plunge since.
Yes.
My question on doing recycle counts with the Chapman wave is this. Having made trough G and then turned up, as one always expects with the maximum count, the Chapman wave trough or peak Gs.
But I must stress that occurs unless there's a recycle. Remember that instant restart?
Yes, exactly.
Okay.
And my question is, having bounced up to 35, 65, somewhere in that neighborhood, and then come down and broken that morning low, when we're starting the Chapman wave count, would you be labeling this new break lower in the 30-minute chart as a new trough A, or would you label it the trough D?
Okay, give me 1 second. I'm going to do this live on air, and then I'm telling you exactly what I'm doing. So, and then E, F. Now, why do I get an F and you get a G? So let me do this 1 second. Yeah, I needed to check. That's a parallel low. 90, 90. Yep, that's low. So that's trough A. So I get, here we go. In the 30-minute chart of the NQM14, that's how I get it. That's the E-mini NASDAQ 100 June future. I get the low of 3584.25 at 9 o'clock on the 6th of May. Then there's a little bounce higher. Then that's what I missed. You see, you gotta be able to. There you go. All right, we're together. We're absolutely in sync. And I love the fact that I redid it because here is what I'm looking at. You see your trough D, folks. On the way down, we give them lowercase letters, and they call troughs. On the way up, they're called peaks. And right there on this bar, on this bar right here, I better not press too hard. There it is. That's saying that at 3553.25 at 1430 on the 6th, there was an inside bar, the next 30-minute bar. Then there was a peak A, which is actually really an A minus because it went lower. But I'm going to also go, and I'm going to show you what I normally do. And I actually do this when I'm trading. I actually do this. I take the time, even if it's a 2-minute chart, as quickly as I can. I quickly type in exactly what the notation is, and I put a plus sign under the D and a plus sign above the A minus. We only know it's an A minus when it went to a lower low. Now I'm going E/A.
Got it.
And F/B.
All right.
Whoops, doesn't type. F/B. And then it goes G/C. Now, it's funny that you should even bring this up because I'm going to talk about something about G/C on the downside in the Chapman wave methodology. So if you want to hold on, I'm going to explain some of the things, and then I'll explain how the count will work or not work because we went to higher than the A minus. I'll be right back with John in Philly.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. So, John, you still there?
Well, yeah, and I watching Tiger TV. That's a fabulous tool. And I see your notations, so thank you for doing that.
So now let me explain to anyone listening who maybe is looking at the trading the NQM. I have got two things going on here. One is that it did go G/C, but because this rally at 8:30 that went to 35, I really have to change that color. It's so hard to see. 3566.50. pierced by just a tad the high that had the potential instant restart back on the 6th with a high of, here we go again, what are the numbers, of 35.62 something or other, 0.75. that means that any further break to the downside below that little diamond, that little plus sign, which is the doji low of 35.41.25 that was made at 3:30 this morning, starts a brand new A to the downside. If it didn't do that, I could have called it a D, because Congo GH, so it would have been C to a D. Now, the most important aspect is you can see it was the pattern that I call the single leg A failure. And we saw that if you look at my 2-minute chart, if you were trading the 2-minute chart, you would have seen there was a spiral to the upside. Where was it? Oh, there was that spiral that went at 8 o'clock to a doji high, and then it came down, tested the 200-period moving average, popped up again, and then just broke right down with just an A-. And that is a very potent, usually a 1-to-1. In this case, it's a 1-to-2 downside move. It's a 1-to-3 downside move from that high in the 1871 area down to the low this morning of 1854.50 that was made at about 10:15. Now what we've got is a fascinating thing. We've gone to a leg D in the 2-minute chart, and I have to put this together. Now, if anyone does Elliott wave analysis, you know that in the Elliott wave, if you haven't learned how to take a straight line move and then go to a smaller time frame to see whether you can analyze it, because there's not much going on. In the larger one, it looks like a single leg. You will then find that there are much smaller legs within it. So on the downside in the 30-minute chart, what I'm looking at here is that this is a possible climactic low, and I've got a volume spike to the downside with volume. Now, this is where I do use volume, and the volume is huge. The volume is, now, TradeStation gives me up and down, so I have to make a quick calculation. So let's call it 35 and 39. So we're talking about almost 79,000 contracts right there, where everybody said, oh, my God, it's, damn, they got out. You know what I mean? Yes. And then some people were buying, but mostly people were pushing it down by getting out and giving better prices for those people who were short. And then what happens is, I call it a rogue wave. It's the exact opposite of the rogue wave to the upside. And this is almost the same as the A minus that we got in the spike of the 2-minute chart. We might find by 1 o'clock to, no, let's make it 120 to 140 this afternoon. If the Dow, which is now up 61 points, and the S&P is only up 3.3, if there's a catch-up in the S&P, it means that there's going to be a catch-up in the Qs, and you can see already that the action of this particular 30-minute bar is filling the last 2 bars. It's about to take it out. It means if it takes it out, then 35.27 will be the 9-period moving average target on the upside. If by 120 we're above that, then the selling could have dried up on the very short term, and you can finally see some decent action in stocks like, I'm going to go to my 30-minute chart. Well, it hasn't really started moving. Amazon is okay after that big candle doji, but let's see if LinkedIn is making a nice turn to the upside. Yeah. LNKD, that's much better. So it's made a round number 36. If LinkedIn is able to break away from that 136 low, and by mid-session, I would put mid-session Eastern time between 12:30 and 1:30. If it's anywhere near the 142 area, you're going to find that short covering could get back the very ugly candle from the opening this morning. I had someone who had bought options, put options on LinkedIn, and asked me last night, what should I do? I'm thinking of taking something off at the opening, maybe keeping some. And I said, take something off at the open, and you might give it a little time. And if the market is down with LinkedIn, you can hold a little longer. But I would be thinking LinkedIn is really close to a bounce. There were other factors. That round number says to me, it's real simple. If LinkedIn closes under 136, probably the NASDAQ will give back a good chunk of these gains, and LinkedIn will say, uh-oh, I'm not ready for a rally. But right as it stands at this point, it is. So I've answered your question to a certain extent, but the most important thing is every once in a while to the downside, you will get a single leg A or an A to B to the downside, having no other way of counting it, even though you had a full count. And that is what I call the coda, the extension to a move that says, wow, now be careful, because you could get a really quick reversal and very sharp.
And thanks so much for that elaboration. That answers my question specifically. Could you lastly repeat, given this current pattern here this morning on the NQMs, I'm looking at your trough A labeling, as you called it, a potential rogue wave. When is it confirmed that that was merely a rogue wave, trough A low, reversing higher?
That's a very good question. There are two patterns. The one pattern is that we could go into a rectangle. We're having defined in this particular bar right here, that's the opening bar, that closed at 1030. So that's the second bar down. The high of 35.36.25 and the low of 34.97.50. I immediately draw a rectangle. And within the rectangle, there should be, in a shorter time frame, the potential for an arch formation. And I take the arch and I make it right up, bumping up against the high of that rectangle, right there. And I actually draw it in and I make it a full arch. And I say, okay, that's the one pattern. The pattern that says to me, is a possibility only because this candle, the third candle, was a little bit higher, says that I could go from here to here, and I could be thinking V-shaped formation, but speed in a V-shaped formation is absolutely imperative. And that says you kind of moved a little bit too long to the side. First think arch and then think V, but if it's going to be a V, the price of the NQM, that's the E-mini NASDAQ 100 June future, should close within 2 bars. That's including this bar. So it goes for one more bar above the trend line, and that says that it should close somewhere around 35.33. That's a whole 10 points higher. That's huge. But I've got a feeling with the work that I've done, one of the reasons why I wanted to go long this morning, add to positions, is because I'm still positive. I'm not bullish. And the bullish would say, I think the Dow is going to 17,300. I'm just positive, saying that I suspect we're going to go to new highs. And that would tell me that the weekly charts are holding very well, and that any decline after that is not the big one. You have to, or a big one. It's just a pullback, and that we should still go to leg D in the Dow, the S&P, and the NYSE over the month of May. So at this particular point, riding high in April, shot down in May. We're waiting for the shot down in May. We've had every opportunity with the sell-offs that we've had, and somehow every single time there's been a rotational aspect somewhere that says we're doing fine. The cork is trying to rise to the surface. I hope that answers your question.
Thanks so very much for that detailed elaboration. That answers my question very nicely. As I leave, I will tell you that in keeping with your idea of rotational markets, I'm looking at the Dow Jones futures. They're making new highs for the day right now. So the buyers have stepped in there again.
Yeah, you know what? I just constantly have to make it as simple as possible. You can even bring it down to 2 things: the VIX and bad news. So it's 3 words, but two items: VIX and bad news. Soon as we get an increase in either, or it must be both. You get an increase in both, then all of a sudden we're looking at something very different. So thanks so much for calling and allowing me to elaborate a little bit on that. Thank you.
Thank you, Basil.
Thank you, John. John and Philly, always great questions. And now let's go to our question. I'm going to go right to the top of the session, just so that I haven't missed anything. Athena Health. One of my absolute favorite shorts. I've been talking about this for I don't know how long, and I call it one of my favorite shorts that we haven't shorted. I can't believe it. Down 7 points at 101.76. This is an amazing company. There are about 4 or 5, maybe 6 folks that constantly come on to being interviewed. One of them is the guy from Salesforce.com. I always forget his name. And Ben, Oh, well, the other one is Ben Moshe, AIG. There's this guy from Salesforce.com. There's a Tesla. And there's, I had a fantastic article sent to me the other day. I might take some time tomorrow to read a little bit about it. It's about the South Africans that have left South Africa and under the radar have just done unbelievable things like Musk with Tesla. I've always known this ever since I came here, and I found that the head of the architectural department at MIT was from South Africa, just everywhere, all the medical schools. It's just an incredible expatriate exodus from South Africa. What a brain drain for South Africa. All right, well, let's get back to Athena Health, because Bush is the guy that's the head of CEO of Athena Health, and he can really talk things up, but every once in a while he can't do that, and this is one of those times, and it is a really good company in what they're doing. I don't know if they're executing like they should. So they made a high of 206.70 in the monthly chart. Peak E became confirmed with what I call the Chapman wave 2-bar reversal. And you made a high of 206.19, less than 51 cents from the top the next month. So you go to February, and then March is confirmed, and you go from 206 down to, let me just type this in here. Where is that? So you've got a high of let's call it just 206 for round numbers, and you got a low today of 97. I get the feeling that that's a bit of a pullback. I'd say 52.9% is definitely. This stock also is getting ready for some kind of a little bounce, but it's in deep trouble. So that's that one there. Let's go back to, so that was Athena Health. Now down 50. No, down 53%. It was 50% when you typed it in. So next question is, let's see, XHB. I've not looked at XHB. I'm pretty sure that I've lost all the notation. I've done it. I don't know how many. It's there on my computer somewhere, but it isn't on this particular library that it picked up. XHB is a home builders. So I've got the ITB. If you don't mind, it's no. XHB is much better. ITB is iShares Home Construction. Let's use that just for the moment because I haven't got it notated. So the question is by Joe in the Den. I'm calling this a double top. I'm also saying Dow's up 101, S&P's up 7.70. I'm also saying that this double top right here has the pattern that if it goes 1/3 below the previous high, lip, and that's at 26.21 on the ITB, you got to be careful because if it breaks the 50% level, it invariably will try to test the low. Wow, that would be the low of 20.18 made in August of 2013. So I'm watching this real closely because the MACD's turned down, stochastic's at 67%. It's under for the second month in a row. Well, the month has barely begun. It's under the 9 EMA, but it is in the weekly chart as well, trying to flatten out, having made a peak E top. And in the daily, you finally got some kind of a turnaround at a trough E, just the same pattern that we've been looking at, like an arch formation, goes underneath the previous low of importance. That's the low of 23.11 made on the 15th of April, and now it's bouncing. So I just call this a bounce. I think from everything I'm looking at that there could be some. Let me quickly go to the overview, my overview. I believe there will be highs to come. I believe that the rotational aspect is going to be really important if we get stocks like an Amazon and a LinkedIn actually having a bounce, another bounce like they had the other day, but maybe this one tries to be a little longer. But if it's not, if they don't get within 8% off the bottom within the next few days, that's just not going to be good at all. However, in terms of the rotation, when you look at the HGX, that is the Philadelphia Housing Sector Index with that same pattern as the XHB. What I'm looking at here is I'm looking at a market that's a little tired, and the big test on the HGX will be if it can break or hold the 189.59 low of the 18th of April. I'll be right back. Basil Chapman, and it's the Tiger Technicians Hour.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. The request was, could I do the notation for the XHB? XHB made a peak C1, C2. It was missed by 2 cents, the 20 top, that 20.00 top that was made in 2010 when it ran up in 2011. Pulled back sharply, started a brand new buy mode, and now is in peak D. So far, this is the second month that he's under the 9 EMA. Got to be careful with it. I suspect that it should be pulling back here, but the big thing will be the XHB needs to hold is the 30.74 Spider S&P Home Builders. It really needs to hold the 29s over the next few days. Now, I need to go through a couple of things here. Just let me quickly run through. Yep, on the C1, C2 chart, always good to look at technicals. Absolutely. And you can only start using the C1, C2 after you've gotten used to going for the Ds. FB, question on Facebook. Facebook, of course, that should be one of those that's trying to rally here. It's down 63 cents at 57.90. Made a peak C in the monthly chart. This tells me that there's still a chance, because IPOs, invariably, if they are strong and they have very powerful moves to a leg C, they invariably get to the Ds. So I'm going to be watching this real closely. Meantime, back at the ranch, made a peak, unusual peak G in the weekly at 72.59, making a consolidation pattern here. But everything about it says, hey, this looks like an oval pattern. And an oval pattern must look exactly, it can't look like a rectangle. You need that spike in the middle. You need that one bar that goes higher to be able to, there you are. And you need the one that goes lower. That looks like an oval, and it says, watch out. If you break, I keep doing that. Oh, it's too quick. That's what it is. I must reset it. Okay. So if you break 54.66, this is the weekly chart. If you close under it, you will likely test, hit it again, you will likely test the low of the 31st, week of the 31st of January at 51.85. If you're able to move higher on Facebook, it's got to break and close above. The height was made 3 weeks ago, and every time I do that, is that going to happen? At 63.65. If it can do that, it says you've made a U-turn, and that's a big positive. Now, talking about big positives, we're about to run out of time. This is the final segment. I will not be doing Larry's show. Unfortunately, I've got a conference, teleconference to attend to, and I've got, so the Facebook is saying those are the parameters. It hasn't given a signal yet in the daily chart to say I'm doing either one of those. I'm just making arch formations. That's why it's imperative that any rally into next week includes Facebook in the NQ, NASDAQ. So let me run my numbers here. The Dow is up. Yeah, it's up a little bit. It's up 113 points. The S&P is up less. It's up 8.64. I am anticipating that we will go to a D in the daily above 16,620. If it goes above that, it should continue rallying to the 16,631 all-time high. If we fail today and then have a lousy Thursday, that says, you're going to make that H pattern right there, that arch formation. It's not acting well at all. So this is very important. Thus far, with the VIX back at 13.46, this is really nice action. Exactly what I want to say. I actually thought I'd see it yesterday, even if it was a pullback. Something happened yesterday was really unusual, and it was broad. People just gave up. They sold stocks, good stocks. So we tried to grab some this morning. One of them is working out well. One we got stopped out of, small loss, but the other one's certainly making up for it. So that's good. Now, as far as I'm concerned, the volatility index is key. The levels to watch for is the Dow. I'll use the Dow as we're going out. The Dow, if it closes anywhere in the 16,520s or higher, that's really nice action. And a give back today with only being up 50 at the close will be quite negative. The VIX index right now has given back a lot. So stay tuned.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.